In this video, guys, we're going to look at what is motivated reasoning and understanding its impact on our trading. Stay tuned. Hey traders, a very warm welcome to thank you for joining me. Okay, so there are various different fallacies and biases that we have as human beings that can creep into our trading. This motivated reasoning is very similar to the confirmation bias that I've done another video on previously. Now, the reason that we kind of like to dip into this psychology section, and listen guys, we're very much psychology tourists as traders going in. This is a very complicated subject, lots of these things, but there's a lot of takeaways that we use in our own trading and to try to combat against us as humans making just poor decisions. Now, we're always going to make mistakes, there's no problem with that, we haven't got an issue, but if we can kind of recognize when we might be making decisions that aren't in our best interest, then even in life, guys, as well, that can only be a good thing, because we can step back, we can observe and go, you know what, I might be a little bit biased here, I might have a little bit of motivated reasoning. So what is motivated reasoning and how can it hinder our trades? Okay, so the first thing is it's evaluating arguments in a biased fashion. So I think the very simple way is to think, hey, I've got a outcome that I want to, or a conclusion that I want. So arriving at a preferred conclusion. I've got a conclusion that I want to achieve. And so I'm analyzing the information, thinking of that conclusion in my mind, as opposed to analyzing the information objectively and coming up with the conclusion after the analysis. You have a conclusion in your mind that you want to achieve, and then you're analyzing the information in a preferred way. So you're ignoring stuff that kind of goes against your conclusion and really focusing on stuff that helps support your conclusion. And you can automatically think of this, guys, when you're in a trade. Okay, the very obvious parallel in trading is not necessarily taking the trade, because taking the trade, I think a lot of times we're objective. Of course, we have emotions coming in and we might be swayed by our last trade, etc. But putting that to one side, generally speaking, we can probably be more objective to take the trade or not. But once we're in the trade, then let's say we're in a longer term position and we're kind of looking at chart patterns, we're looking at maybe some earnings or anything like that, and we're saying, okay, is this supporting the trade I'm in? And if we're not careful, we only look at things that support the trade we're in. So you might have a chart pattern and say, well, that looks like a big bull flag. When in actual fact, you know, it's more of a kind of reversal. It's failed to come through highs and it's rolling back over. You know, you might say, there might be some data comes out and the earnings are really, really bad, but you might then cherry pick and say, well, this part of it makes the long thesis correct. And the trouble is that, I mean, many of us don't trade specifically on reading through earnings, but the idea is that we're just looking at fresh information and we are only cherry picking what we want because we have a motivation, which is we want to be right. We don't want to appear stupid to ourselves for taking a trade that was silly. And especially if we've got our neck on the line and we've shared it with a trading group or something, you know, a lot of people have their ego involved in it as well. So the motivation is to support the outcome of the trade, support the way you've got the money on the line. And the trouble is, you know, we don't, this is the key thing is, guys, is not to avoid these, it's to make sure that we recognize what's going on. So we get the illusion of objectivity. So we think we're being objective, we think we're saying, hey, this chart pattern, we're looking at our daily chart and we're thinking, okay, that looks okay. When in reality, if we didn't have the conclusion that we wanted to come up, which was okay and we should stay long, we probably would have looked at it and gone, you know what, that doesn't look like a great chart pattern at all. It's just stagnating, I don't know where it's going to go, or it's a reversal. So you get the point. The idea is that we're very much you know, framing and wrapping the information to suit our conclusion, and we see it all around ourselves, all around anyway, guys, don't we? You know, we see it in life. You know, I definitely see it in terms of where different people stand on the currently got this coronavirus. Whenever you're watching this, you're well aware of it, but you know, people are standing on different sides of the fence, and when they're looking at information, most of the time they're looking at it to support the theory they already have, as opposed to looking objectively and kind of swinging from side to side. And it comes when people are voting as well. You know, you see it very often when people are voting for one party or another, they'll see information coming through and they'll tend to dismiss stuff that doesn't support their conclusion, but they'll tend to take stuff that's a little bit more, if they've already decided to vote one way, then they'll say, oh yes, well that really makes sense that I should be voting that way, because they want to vote that way because the motivation is they've already committed to that with family or friends. And that's another key thing, and that's probably a little bit more in depth, is that the motivation of why you would come up with that. A good kind of example that I read about is a smoker. A smoker he's got a motivation to find information that supports that smoking is okay for him. So you're going to look and dismiss stuff that's not, because the motivation is he's been doing it for a long time and he wants to feel good that he's not doing himself damage, even though probably deep down he knows that he is. So you get the idea. And the same thing about if you bought a car. If you've bought a car, let's say you're looking at 2 or 3 different models. You've got a BM, you've got a Merc, and you've got an Audi, say. You're looking at the 3 models, you make a decision, you go, oh yeah, I'm going to take the 7 Series over the A8, or whatever it may be. You buy it, and then it turns out to be, not that great. You're not happy with the driving position, you can't get comfortable in it, you don't like the layout, maybe there's a bit more road noise in it, maybe it's not as quick as you'd like, those things. But you will always, not think about that objectively as you were when you were buying the car. You're always going to say, well, you know what, it's okay, I can put up with it. And you're going to look at the big things, because the motivation is you don't want to feel like you've made a big mistake by forking out 80 grand on a car that really wasn't suitable for you. But so you get the idea, guys. The final thing is it can hinder good trade decisions, because just as we talked about, if you're in a trade, I don't think this affects you so much when you're taking a trade, but when you're in the trade and you're evaluating the trade, you've got to be so careful that you are objective, because trading is not about being right. And this is the big thing with humans. We want to be right, but trading is about making great trades. And sometimes making a great trade is getting in the trade. The trade does something for a couple of days, and you're out of it because it just doesn't do what you want to do, and it just doesn't look like the trade that you want to be holding. And then you move on to the next one, and to the next one, and to the next one, or whatever the case may be. So, again, very many things a lot of these emotional type things and biases come back to being right. Whereas if we can reframe that and look at it as a bigger picture, as we always say, guys, plenty of videos talk about this, bigger picture. If I'm doing that trade 100 times, 1,000 times, how's it going to come out, rather than each individual trade, right or wrong? It can be far, far better for us. So watch out for that, guys. Motivated reasoning, giving that illusion of objectivity. If we can step back and make sure that we are making an objective decision and be kind of bold enough to say that we might have been wrong earlier. It doesn't necessarily matter. We don't have to label it as being wrong. We might have made a decision that was right at the time, but we don't now need to make that decision and support that decision even more. We can say, hey, we don't need to look at it anything other than objectively, because that is what is going to pay off in the long term. Just like that, just like the hindsight bias that we have, just like all those other biases that we've talked about plenty of times before. Anyway, guys, take care. See you in the next one. Bye bye.